Welcome back, everyone. This is the Cutting Edge of FinTech track. I'm very happy to be with you this afternoon. And we are next moving into a session on lending as a service where my partner, Peter Renton, will be interviewing David Johnson from Vervent. Before I hand it off to Peter, I want to remind everyone of those same reminders you've been hearing all day, but do it now. Book your networking roulette session. You can do that. You can wander away from this tab, no problem, and we will follow you. The video and the voice and everything will follow you around the platform, which is a great feature. You can also book meetings, and then when you want to come back and interact with the chat and Q&A, definitely come back to the live streaming tab where you can do that. Now, without further ado, let's kick it off. Peter, take it away.
Thank you very much, Bo. Hi, David. How are you doing?
Hey, Peter. Doing very well. Thanks, Bo. It's good to see you again.
Okay, so maybe we could kick it off just to give a brief introduction to Vervent. Not everyone knows what you guys do. So, how do you describe Vervent for the audience?
Well, Vervent was founded in 2008, and I'll do a little history just because people will probably respond to names they've heard. It was originally founded as First Associates Loan Servicing, which was a company that from the very early days of LendIt, I think we were at pretty much every LendIt show that you guys put on.
I think so.
LendIt show. I'll just give you a shout out for putting on a great show.
Thanks, David.
In the summer of 2019, we took an investment in from Stone Point Capital, and at the same time, we acquired PFSC, which again, many people will remember. We rebranded the company as Vervent, and just last week, we acquired Total Card Solutions, a credit card servicing company out in the Dakotas, which is for everybody who recognizes those names, that's part of who we are. Today, as we stand, we have about 1,100 people across 5 locations, and we offer primary servicing for loans, leases, credit cards. We offer origination services. We do call center support. We do a lot of capital markets support in the form of custodial verification, backup servicing, those types of activities. So we're kind of the quintessential lending as a service company.
Right. You certainly are. And maybe we could just start off with talking about the acquisition, because I know it expanded your capabilities quite dramatically. So why don't you just give a minute to the audience about what this acquisition was all about?
Absolutely. So we had 2 major strategic imperatives we really wanted to accomplish with this acquisition, and we feel very good about accomplishing both. And the first was to move strongly into the credit card space. So historically, Vervent has offered some ancillary services around that space. We all know how large the space is. I mean, we wanted to go in a more major way, and so we feel like now we've done that by acquiring this competitor who's been in the business for 20 years and has a very well-established reputation for both capabilities, excellent service, and a credit underwriting box that has been steadily improved over a 20-year span. And then the second piece of that was for Vervent to take our lending as a service platform, that last mile to the consumer, which is last year at this time, we really were a company that did a little bit in origination, but it was mostly post-origination where we did our lending as a service piece. Now we've taken it that last bit and we're doing consumer acquisition, application processing, credit underwriting. So the whole spectrum for an organization to be able to come to us and have us help them support a program which lends to consumers or small businesses through the entire spectrum of activities.
So just before we move on from this, are you going to take some of these new offerings and expand them? Like the customer acquisition piece obviously has, that could be moved into any vertical. Are you going to be just focusing on credit cards, or is it intention to expand to other verticals?
We'll be expanding that into other consumer verticals. And I think it's fair to say many of our clients, especially on the capital side, many of our clients who participate in the lending markets, whether it be loans or leases, are also in the credit card space. There's a lot of overlap between the customer groups.
Mm-hmm.
So for us, it's really being able to provide this service that our clients are asking us for, and to take it both ways. There's, people who participate in credit cards who want to move into other spaces, and we really allow that kind of free flow between the spaces.
Right.
And of course, while we, Vervent, don't own any accounts, we're strictly third party, we're happy to enable and provide for organizations of all types to be able to lend, without having to build up a big infrastructure.
Right. And just maybe you're obviously very well known in the US these days, but how are you approaching Latin America? What's your presence there? What are you looking to do?
I would say it's interesting that we're talking about this, because I think the last time we talked about this was at your inaugural Latin American LendIt in Miami last year.
Yep.
At which point we really opened into that market. And the market development has slowed down a little bit because of coronavirus, just like everywhere else. But we are focused on providing the same services in Latin America. And really, we're kind of starting out with Mexico, Colombia, Argentina, Peru, and starting to step into Brazil right now, and offering the same suite of services that we offer in the North American market, both in the United States, in Canada. So our intention is for it to be a very kind of, same type of activity.
Right. Got it. Okay, so then maybe let's just step back and talk about lending as a service generally. How do you define lending as a service, David?
It's funny that everybody has their own definition of these types.
I know. That's why I asked for yours.
Yeah. So for me, lending as a service is simply, it's banking without the banks. It is a support function of the open banking movement, to be able to have an organization that lends to consumers or small businesses without using the classic bank infrastructure, without having to build up all of that infrastructure, to be able to simply use somebody else's, and to know that when you're using somebody else's, that is, a bulletproof, a solid way of doing it, and that it's scalable, and that it's fast, and that it's convenient for those consumers, and that you're really able to deliver on your brand promise to those consumers. It's pretty exciting. Most of our clients fall into that bucket of companies who want to make that leap into that. And we're happy to enable them to do that.
Right. And so when you look at the trends in Latin America, and I know you've been studying this market now for a decent amount of time, what are the trends that you see that really make lending as a service like a real major trend in Latin America?
Well, in Latin America, as with many of the developing markets, there's a lack of infrastructure in some areas.
Right.
And there's strong infrastructure in certain silos, weak infrastructure in others, but it's very difficult to create one even flow of strong infrastructure. And it's that creating that even flow that really, to us, is where the opportunity lies. There's certainly historically been a lack of credit penetration in those markets, which I think we've all identified as a strong opportunity. But delivering on that credit penetration is going to be difficult with the current infrastructure levels, which is, not surprisingly why we see so many new startups, why we see so many kind of very scaled large entrants into the Latin American markets.
Right. And we know that we've heard already from several people today talking about how the need, and Latin America is certainly evolving, but it's not yet at the level of infrastructure you have in the US or Europe, I would say. But so within lending as a service, and you described many things when you were talking about it. I mean, what do you think are the most important needs right now for this market, and what's missing the most?
The interesting piece about lending as a service is that the most important part is the service part.
Right.
It's very, it's a relatively straightforward activity to secure software, APIs, to do the technical parts of lending as a service. But the service part of the operation is much harder to pull off. Mm-hmm. And with that comes things like, for instance, regulatory compliance, which in a lending as a service environment, you expect your partner to provide that regulatory compliance, which certainly Vervent does. If you're just buying a set of software or a set of APIs, then that leaves you to build it yourself. And it's really the service component, the team that provides that service is critical to having a smooth experience with the regulators, with the consumers. And it's true also of origination.
Right.
You can certainly buy something to build a credit underwriting box, but without the experience and the know-how to make it go, that often ends up badly. Again, as we saw in kind of FinTech 1.0, let's call it, it wasn't long before financial professionals started being brought into the industry and really more or less took the helm at many of the largest companies.
Right. In fact, I think you look at the executive team in most of the large companies, certainly in the US, it's filled with traditional bankers and credit card executives from the incumbents. So, lending as a service, we've been talking about this in the US at our US events for several years now. I'd probably say 5 years we've really been talking about it, and
some time.
and so I'm looking at and we've really got. I mean, you guys, as you say, you've got a very broad suite of services. Obviously, there's others that provide different pieces, but there's many banks that are now kind of outsourcing pretty much their entire lending operation from origination through servicing, all the way through is, and they're doing it because, they don't have the expertise. Is that the similar sort of thing you're seeing in Latin America, that people want to take these best in class companies, like yourselves, so they don't have to sort of create it in-house?
Well, two responses to that. One is, it's a mix.
Right.
Even in the North American market, it's a big mix. It's basically what we offer sounds like a huge suite of products, but if you took it on its all-encompassing length, it's just one, lending as a service. But different organizations have different needs, and one organization may need these three parts of it. They may need origination, they may need servicing, but not the other parts. Somebody else may just need servicing, and it's the ability to menu it out so that an organization can pick which pieces they want and which pieces they need, which makes it really hum. And this is true in Latin America and everywhere else. Whereas if you're an organization lending money out to consumers or small businesses, you have to have something that you're going to create your competitive advantage in. Otherwise, really, what are you doing? You're just a source of capital. And that could be a brand, that could be customer acquisition, that might be underwriting expertise, but those are the most common that I see. But there has to be a source of competitive advantage, and then you can use a company like Vervent to fill in the rest, where you're not really creating a significant competitive advantage. Just plain post-origination and servicing is kind of the classic example of that. It's very scale-driven, it's very compliance-driven, and it's very difficult to create a competitive advantage as an originator in that space. Mm-hmm. It's something that's better off outsourced.
Right. And it strikes me as you're talking, David, I just was thinking, we've heard the term super app a couple of times today, and that's Latin America has certainly had, there's a couple of different companies really vying to be this super app for consumers. And whereas we don't really have the super app, hasn't really hit the US that much, but it's certainly Asia, in China, it's very much so. And I know you know the Chinese market pretty well as well. But I'm just thinking, like, this whole super app piece, because if you're a super app, you need to have all these things plugging in, right? It seems like to me, if you want to become a super app, you really need to, you can't do it all yourself. It would just be incredibly complex. So I'm wondering if that trend may be kind of lending as a service, and I hadn't really thought about this till now, but lending as a service is sort of really well suited for the super app trend.
It's very supportive of that, even for, even if you're calling it a neobank and, it has a reduced kind of functionality. But a large number of our originator clients have apps. They're very app driven, and they're usually much smaller than, what you would call a super app in the Asia or in Latin America. But a lot of what we do is to support apps. Clients who have their entire interface with their consumer via an app, we're just supporting that. And the other, open banking companies are supporting different other parts of that app, whether it be wealth management, whether it be credit management, are those other pieces. I think that's a very valid point.
Right.
Right. To get back to your prior question, I had a two-part answer. I got through that.
Okay, go on.
No worries. And the second part of that was just going to be, we also see the flow of our clients from North America going down into Latin America.
Interesting. Yeah.
So a big part of the demand that we see is those clients who are familiar with us, they want us to move with them. Generally credit funds, banks, investment banks, and they want players they know that they can trust, they know that are reliable, and they know what you do on a very detailed level. And so that's also like a critical part of what we do, is supporting existing clients, basically as they, move out into new activities or as they move out into new geographies. Yeah.
So we're getting quite a few questions coming in here. I want to get to some of these if we can. Question, are your primary customers banks or regular businesses intending to offer loans? Maybe price some clarification there.
Yeah, I would. I think if our clients come in, and generally like two main buckets. One bucket being originators who are originating debt products for consumers, small businesses, whatever it is, and we support them. And then the other clients are capital providers, and they are providing capital to that same group of originators. And we have a slightly different set of services that we use to support those clients. So really, it's two separate, distinct groups, both equally important to us.
Right. Okay. Another question about collateralized loans.
What we found within those two, sorry, Peter.
Go on.
What we found within those two groups is it's very self-reinforcing. It's very beneficial to our originator clients for us to have these strong capital connections, and very beneficial for those capital clients to have these strong relationships with the originators.
Right. And this is obviously a trend that's important in Latin America. Asking, do you offer solutions for loans with collateral for asset loans?
We do. We absolutely do collateralized loans.
Yeah. Okay. Okay. Will you look to make acquisitions in the Central and South American geographies?
Yes. That would be the most expansive answer I would give to that question.
Right. So someone has just announced an acquisition last week. So
I need a break.
Exactly. We need to make sure we can travel again as well.
That would be nice.
Yeah. Okay. Could a bank become the ultimate lending as a service provider if they provide the product via APIs plus the capital with their low cost of funds?
Capital provision is a function unto itself, right? And we've seen how the banks play, and generally it's very effective for other capital providers to play in a space where they may be doing something between a credit fund, the securitization markets, some warehouse arrangements from someone who looks like a bank. I think there's a lot of different flavors of capital providers, and it's a very competitive market. Banks are extremely competitive because of the deposits, but they're also very limited on what they can do with those deposits. And we also see banks playing in the charter space. Obviously, there's a lot of that. There's been a lot of that throughout the fintech movement, a very important role they play. But for them to provide the entire lending as a service, what we've seen is that the banking infrastructure is just very heavy. So while they can have an advantage in some of these point products where they have a regulatory advantage, it's very difficult for them to compete across the entire spectrum like that, where there's lighter, more nimble competitors.
Right. And I would also add that, we've seen, we've seen in the US, it's not the banks that are providing this. They're the buyers of this. But yes, occasionally we've seen one or two banks spin off. Some of the newer banks have spun off a division that is providing it now, because they built the technology in-house and they've realized this is something that we can provide it elsewhere, particularly on the origination side. I think we've seen, but the banks just don't seem to be interested in really making this, a core part of their business, it seems. So, okay, let's go with a couple more questions before we wrap, David. How should the Latin American fintech companies, what should they be doing? How should they be positioning themselves to really take advantage of the efficiencies that lending as a service offers?
To me, the winning strategy is always to define what your competitive advantages will be and go all in on those, whether it be origination, underwriting, whether it be customer acquisition, whatever that is, but to go all in on that piece and outsource everything else. Not even just lending as a service, but basically to outsource everything that you can in order to get wholly focused on those areas where you can create an advantage and win.
Right.
And where that advantage is going to depend on the company, but there has to be something where you can create an advantage and win.
Right. So I think just one last question. I want to get obviously this has been a really strange year, and I think the audience might be interested to see how a company that does loan servicing as part of their offerings, how you guys were impacted during the pandemic, how you handled it. Obviously, lots and lots of activity on the loan servicing side. Just maybe tell us how you scaled up, how you're able to handle the challenges that many of your loan originator partners were dealing with.
Absolutely. I mean, over the years, we've built the company to be highly scalable in bursts. So for instance, right now we have roughly 1,100 employees with the company, and our occupancy rate for the 5 different locations that we have is roughly 40 to 45% at any given time. And you think about just the physical scaling. Earlier in the pandemic, we actually opened up another call center in San Diego to fit several hundred more agents in there. We've also just done things in the tech realm where we can simply add more people as we need to very quickly, very easily, and the things that don't require people are just scaled up using tech. We haven't had any significant outages, although we've wrestled with coronavirus like everybody else. It's made it more difficult, but we've been nimble, we've been quick, and we have to date had a very healthy company, which I'm extremely grateful for.
Right. Well, I see Bo chiming in. I think we are out of time, David. Thank you very much for coming on LendIt Fintech LatAm this afternoon.
Thank you, Peter.
Okay. See you.
Thanks, Peter. Thanks, David. Excellent session and a very lively audience there with the Q&A. Couple of notes as we move into the next session. We will be tackling creative ways of expanding financial inclusion with a host of panelists: Aflore, Masper, Arakar, Adi, Mambu, and Quona. And at the same time that I was reminding everyone to set up your meetings, now I need to remind you to reject your meetings. There's 543 pending meetings out there, and if you're sitting there on an invitation and you're not accepting or rejecting, you've got to reject. Just move on, because that's the way this works. If you're sitting on a pending meeting, you can't rebook that meeting. So reject. We'll be back shortly with that next panel, and thanks again, David, for joining.